This is Compound Insights, a podcast by CFA Society New York. I'm your host, Rob Rowan. Today, we are here with Philip Cook, who is Co-Chief Investment Officer and a Principal of Southern Sun Asset Management, a very, very good small cap manager. I'm really looking forward to hearing some of his thoughts. He is responsible for the coordination of research and communication with the investment team. He's also responsible for the research and analysis of existing portfolio companies, as well as new ideas. That's going to be the crux of what we're going to be talking about today. He also works a little bit on portfolio construction. And before this, he was an analyst to the chairman and CEO of Trivest Partners. He received his bachelor's in international business, summa cum laude, I would add, from Auburn University. So thank you for being here, Philip.
Thanks, Rob. It's good to be here.
Right, so I would like to get into this because small cap has been really interesting for the last couple of quarters. One of the things that I always remember from my time is boy, those people in small caps do a lot of due diligence. And some of the information is not that easy to get. So I wonder if you could start off with how you think the explosion of big data and the other access to data has impacted your job on a day-to-day basis.
Yeah, obviously the explosion of big data is something that's evolving rapidly. There's a number of positives, and I can think of a number of negatives as well. Although with any struggle, there's an opportunity in there. On the positive side, from a small cap researcher's standpoint, as you mentioned, smaller companies sometimes harder to know as much about them, not as well followed, not as much public information. So there's a lot of work that has to be done to try to piece together not just the business that you're looking at, but the industry. A lot of these niches that we invest in have private companies that are competitors,
right?
Or they're small subsidiaries of a giant global corporation, and that company doesn't talk much about that small subsidiary. So how do we get at who our competition is, and how do we get at where is the opportunity set, where are the risks, where are the challenges? So while big data presents an opportunity, and there are tools out there now that allow us to do our research by typing in keywords, they're pulling in multiple sources of data, multiple data sources to pull in information that's useful in our due diligence process. A lot of the hard work for understanding a small cap company still requires getting out there and talking to businesses. We have to go and interact with humans. That requires us to go to trade shows and talk to private companies that are in these spaces and try to really understand product development and new entrants or supply chains and the like. So while I do believe that over time there will be more and more opportunity for us to harvest the beauty and the benefits of big data, I would say by and large, now and even for the foreseeable future, I think to really be excellent at our jobs, to really do the due diligence that's necessary, there's still going to be a very large human component to getting out there and understanding what's happening in an industry, what's happening in different geographies, and how it might be impacting a particular business.
I guess by the transience of that, do you believe that one of the negatives of big data is just the lack of that personal contact that helps you get such a good insight into that?
Yeah, that's a great point. Yes, I think one of the big negatives is that we as humans have a tendency, increasing tendency to believe what we hear. And the more sophisticated the source might seem of the information, the more likely we are to just trust it without question.
Right.
And I think on the one hand, that's a big negative. On the other hand, for somebody like Southern Sun, I think it's an opportunity for us to take advantage of human behavior, knowing that there's a plethora of investors out there that are pulling in either quantitative or qualitative data points and using that bit of information to make a decision without really asking questions. To the extent that the sources seem sophisticated, there's more of a blind trust there. And that allows us to come in and say, let's keep doing our homework from various angles and figure out if that source is accurate or not. Over time, I do believe that we will latch on to the validity or sort of the efficacy of certain sources that seem to be more reliable. But right now, there is an explosion of people coming out and pushing data out at us and others, and figuring out what's trustworthy and what's not is an art. It takes time. It takes real hard work. And I think that that's something that will develop. Probably there'll be consolidation of sources, I suppose, over time. But right now, there's a lot of folks that are looking at a myriad of information sources and using that information to make decision, and that's good time for us.
Yeah, rarely have I heard in this podcast someone outline an opportunity set closer than the person who founded this house, Ben Graham did.
Yeah.
You were
Amen.
saying that, I thought there's a picture of him over there, and I thought, hey. Well, so let's shift gears a little bit because there have been some earnings challenges, let's call them, in the first 2 quarters of this year, particularly in the first quarter of 23. So when you're out there talking to folks, how are they feeling about that? Or how are they feeling about overall profitability, earnings, et cetera?
Yeah, I think that's one of the important things. If your sole data point is what a company says on their earnings call, you're limited there. So, so getting out and really going, meeting with businesses, meeting with folks that run facilities, going to trade shows, talking to private companies, marketing people, R&D people, gives you a better sense of what's happening in the world. And I think one of the exciting and confusing things about where we are exactly today is that it's not even. The information is very uneven. So there are a number of positive data points and there's a whole number of negative data points out there. So it's certainly not clear that you use the word disappointments. It's not clear that things are disappointing right now. Mm-hmm. There are plenty of data points that suggest that, and then there's a whole nother group of companies out there that frankly are seeing tremendous strength in today's economy. So I am hearing, we've spent a lot of time on the road right now. Whenever things are uneven, I think we get out even more than we normally would from behind our desk to really try to get to the bottom of things. And again, I think as we've gotten out there to hear what business leaders are saying, the reality on the ground is that demand is relatively strong even to this point. Mm-hmm. But doubt is also stronger than it's been in quite a while. So where we go into the second half of this year is more in question than we've been. And that, again, creates that uneven environment. So hard to say that earnings are disappointing because they're coming off of record results last year. So you think about first quarter results, it's against a backdrop of tremendous strength over the last couple of years. So I think that lens is important. We try to sort of look back and say, where were we pre-COVID? Where were 2019 numbers? And how is the company tracking relative to the pre-COVID numbers? Again, some businesses still haven't gotten to pre-COVID levels yet. Yeah. Their sales are still down from there. And then others are at multiples of where they were before. So very uneven is how I would describe it.
Yeah. It's well, and it's sort of similar question, how the companies you're talking to are handling inflation. Although today we got a pretty good number on it. It might be going in the right direction, might take a while, but how are they handling that?
I would say inflation is creating tremendous challenge. I think there's always opportunities when there's challenges, but overwhelmingly, I think there's challenge. There's challenge that creates, there's certainly balance sheet challenges. Mm-hmm. We've been through a period where not only the rate that you're paying on your debt, but the access to that capital has been so easy. And a lot of businesses have taken that as an opportunity to take on debt. Right. So there's balance sheets that are really struggling. Then you throw in a banking crisis on top of that, where all of a sudden banks have to be more critical about what's sitting on their books.
Right.
I suspect we will see a pretty significant increase in bankruptcies over the next couple quarters. A lot of those discussions between company A and bank A take a few quarters to play out. But I suspect that there will be more challenges ahead for businesses that were quick to borrow here in the last few years. And it's way beyond the inflation impact is way beyond the interest rates alone and what it does for balance sheets. There are real challenges to the cost structure of a business,
Right.
which is pushing companies to think about automation and their labor force. It's forcing companies to think about where they're manufacturing. Inflation is pushing countries to compete with each other. And I think it's one of the creators of the geopolitical regime that we see right now. So inflation is a very significant threat to the status quo that we've had over the last 15 years. And I suspect that means for equity markets, what has worked for the last 10 to 15 years isn't necessarily going to work for the next 10 years or 5 years or however long it is. But as you mentioned, inflation seems to be hanging around a little bit. And the longer it hangs around, the more painful its tentacles reach deeper into it, goes way beyond the balance sheet, and it really digs into the operations of a business. It digs into the partnerships that have been developed between companies in this country and that country. And so the knock-on effect is pretty significant. And we're seeing that, and it's forcing companies to ask a whole lot of questions about their entire cost structure, not just, hey, inflation's up, we've got a price for it, and let's see if we can recoup our cost inflation. It's significantly more meaningful with longer term impacts than that sort of simple story that I think we hear on the news from day to day.
Yeah, and the news tends to be focused on the things that are in sort of people's wallet issues, which does translate into business problems because the U.S. is the king of the consumer. So, so it does matter. But it's fascinating. So something you just mentioned, I thought was also interesting. And this is what a lot of people call globalization 2.0, which is onshoring, reshoring, moving things around, moving production around, means around different countries. How do you think that's going to impact small caps as a whole?
Also, a very good question. I think on a high level, small caps are in a pretty good spot because I think the geopolitical tensions that we see, I think that the inflation that we're just talking about, the labor issues that we're talking about, demographic issues around the world where the labor force is getting older and not being replenished by a younger workforce, all of those various factors and many more are creating a need to think about who your trading partners are, where your operations are, where you're manufacturing. And on the whole, small caps have a more nearshored supply chain.
Right.
So those ships are easier to navigate than their larger cap peers. So by and large, I expect significant movement in supply chains and onshoring, reshoring, that whole globalization 2.0 concept. I suspect that these next few years are going to really see major shifts there are companies that we're talking to and others that are talking about their plans for the next 20 years, because that's the type of decision making that you're undertaking when you think about these supply chains, where you're manufacturing, where your CapEx dollars go, what your labor footprint looks like. A lot of these automation investments don't have significant returns on capital initially.
Right.
It's more complex than that. It's security of supply. It's geopolitical risk aversion. It's not just about hey, that robot cost $100,000 and that person cost $100,000. What do we gain from that? It's much more complicated than that. So I think larger cap companies with their global footprints have a lot of work to be done and a lot more risk at the current place where we sit. So I think small caps are overwhelmingly sort of compared to large caps in a good position, but I also think small caps are more nimble. So to the extent that there's opportunities, we're seeing companies that are getting operations set up in Mexico a lot quicker than a large company can make the decision to shut down operations in China and shift it to Mexico. That's a multi-year decision for a large
Yes.
corporation.
Yeah.
And smaller cap companies have that flexibility. So we love that dynamic and think that creates some competitive advantages over the next few years.
Huh. Interesting. Fascinating. All right. Well, yeah, thank you, Philip. I'm so glad to hear you say these things because one of the things that I thought was always very oversimplified in a lot of the Globalization 2.0 conversations is that movement that sounds like you just flip a switch.
Yeah.
And it takes a lot to shut down a company. It takes a lot to build the network of professionals to build a new one, and then actually build the darn thing.
Absolutely. And then on top of that, you have to get partners on board with it because most of the time these companies are not perfectly vertically integrated.
Right.
So they've got to find the supply chain around their new geography that creates the type of quality that they need.
Right, because the
That
QC is
is,
the other thing. Yeah, yeah.
yes.
It's mind-blowingly complicated and much take a lot longer than I think people are talking about.
And a lot of these experts, a lot of these supply chain and R&D, they're exhausted right now. The
Yeah.
last few years have been very taxing. They have worked overtime almost nonstop. And so the capacity of an organization to take on that new challenge, you've got leaders, and I've had plenty of these conversations where leaders are asking themselves, is now the appropriate time to ask them to take on this challenge?
Okay. I didn't think about that.
So there's another layer to that where you've exhausted folks and you don't want to lose them.
Right, right.
We're in an environment where competition for engineers and competition for bright minds is at a premium. So how far do you push somebody? How much is it going to cost you? And then honestly, in the industrial automation space, there's not a whole lot of consultants. So it's
Right.
again relatively tight as far as what you can take on. And I suspect that means a decade-long process, not an overnight process or even a 2 or 3 year process. And I think that's kind of again, that's a good thing for small caps. Obviously, I'm biased, but I think
Well, that's great. Well, perhaps we should leave it there because that's given us a lot of things to think about. So thank you very much, Philip Cook, for being here.
glad to be here. Thanks, Rob.